When you combine the future trading data along with the price, it is not just the future trading, it is future trading more intelligently. Hi everybody, welcome to the video. Why future traders bleed money? We're gonna talk about this. Before I tell you, I have to tell you standard disclaimer that strategy, adjustment, the tricks, techniques contains certain degree of risk to the capital. There is no strategy which is 100% in the market. Knowledge which helps you become the better trader. Before I tell you about the techniques of future trading, I want to tell you the future play in market in a nutshell. I'm going to tell you margin advantages. I want to tell you those blind spots which many traders miss when they trade futures. And I'm going to tell you open interest plus price section, how to really read futures. Now, before that, I want to tell you future play in the market in a nutshell. And there is no better way to teach you than me showing you the chart of a particular stock. So what you see on your screen is a daily chart. By example, I've picked TCS. It can be any stock. This is not a recommendation, but just an example. What you see that every candle represents one day, and what you see is that stock going up and stock going down and breaking the support, etc., etc. It's happening on the chart. Now, suppose if somebody has to trade TCS in a cash market, then simply one can buy and long the stock, or if you're trading intraday, you can short as well. But there is another alternative. If somebody wants to trade TCS in the futures, right? Future basically come in the packets, like stock, for example, you can try to long or short 10, 15, 20, maybe 100, maybe 1000, 11, whatever, any random figure you can do. But when you trade futures, future come in packets. For example, every stock has different packets. For example, TCS has a packet of 175. That means if somebody try to long a stock, every movement up will be 175, every movement down will be 175. In fact, I want to tell you something very interesting. If I show you the margin benefit, here what you see is that I have come on a Zerodha margin calculator. And what do we simply see is that if we simply long this stock, the lot size is 175. Like I said, but the total margin requirement to long this particular stock is approximately 97,000. To long how much? To long 175 quantity, which is one packet, can also be called one lot. So approximately a lakh. But if somebody try to long TCS with the same quantity but in the cash market, then 175 multiplied by 3106, which is the current price, it comes out to be 5,43,550. That means we can long or short the same quantity if we trade in the futures market at approximately 98,000. We don't have to go for upfront payment of 5,43,000. So it's very clear that there is some kind of a margin benefit if we trade into the future, but future trading contains a lot of risk to the capital, and I'm gonna tell you those points which many traders ignore. Key margin advantage I've told you. Also expiry. Unlike stock, for example, if I'm building a stock portfolio, I'm longing the stock today for whatever amount, I can hold it for years and years, and I could just exit it whenever I would like to exit, probably in profit, probably in loss, whatever. But if I trade futures, I have to square off the future at the expiry. Now, expiry happens every last Tuesday. So, for example, if I'm longing a future, on Tuesday, the contract is going to get over. So, before Tuesday, on Tuesday, the last Tuesday, I have to square off the future and I have to go to the next series and then long or short the future, obviously. So that is something we can't just trade future and forget about it like we can do it in the cash market. Very important. Before I tell you the real tricks of trading the futures and the blind spots which many trader misses. Also, if you've been trading into options market from quite some time and you want to really get the in-depth information, here what you see, the playlist, you can definitely go through the playlist and you can learn the option strategy which I have laid out for you on this channel. Now, the cash market, if you go into cash instead of future, you get dividends, but in future we don't get dividends. This is a very key important point which you must know. Open interest and rolling I've already told you. Open interest is what I'm going to tell you now. I want to show you something very interesting. Let's go to the chart and let's read the future and open interest. I want to tell you that. I think it's going to be more interesting if I show you the chart. Many people like it. And once I teach you this, I want to tell you additional points towards the end of the video. Going to be a lot of fun. So here we are on the TCS chart. What you see is a everyday candle. One candle represents a day. It can be any stock because I have to pick an example. Now here what you see on 25th of September, if I just mark it, here you see is that TCS has really broken the support and has gone down, right? And what you see after a few days of consolidation, the stock has gone up and it's made a big green candle. And after that, the stock never sort of, breached the opening of the day and stock just kept on moving and then the stock is here now. So as a trader of the future, how can we use the data of future to have some kind of a market gazing for us? For that, I will take you on the website. Now, this video is not affiliated with them, but StockEdge is doing a really good job. The data presentation is very good. I want to show you these two dates. I want to show you how the StockEdge is showing. So here we are on the StockEdge websites. You can go to web.stockedge.com since they are doing a very good job, and probably video like this can really help you. What you see over here is that we have come on future open interest tab, and this is showing that the green dot which you see is that, for example, from 28th to 29th, open interest has gone up. Open interest means new position created, and at the same time what you see is that these red bar means that the open interest has gone down. That means there are no new positions. In fact, people have reduced their positions. Now, like I told you, combining with the price action, we got to see to have any kind of conviction. Now what you see is 25th of September, the stock breached the support. Now, how we're going to get the conviction is that we will see 25th of September, we're going to see here what happened. And here what you see, this dot, 25th of September, stock has gone down. We have seen it in the chart, as well as there is tremendous open interest addition. That means there were a lot of new positions created when the stock was going down. This can help us reading, will the stock gonna have a follow through or not? Obviously, this is not 100%, but with other tools, you can have some kind of a good grip on the subject. But today's topic is future. So I'm telling you about the future open interest. What do you see next day? After a few days, 6th of October, it made a big green bar. Let's see what happened when we were doing it here. And what you see, the market gone up, yes, but at the same time, it had a support of new open interest, right? New positions created, along with stock has gone up. And what do we see? That there was some kind of a follow through in the stock, because like I said, price action along with the data of the future. And why do people prefer to trade in the future? What's the reason for that? The reason can be because of the margin benefit. Like I've showed you on the Zerodha website how much margin is actually reflecting. But I want to tell you, when you trade with lesser margin and you have some kind of a leverage which future trading provides, this is a double-edged sword, because if the trade is going with you, then it's good, but trade can also go completely against you. Then the loss is also gonna be obviously a lot bigger. As you know, yin and yang, every coin has two sides of it, and here on this channel I want to tell you both the sides. But now let's talk about the common mistakes if you trade future or if you have interest in this subject. The rollover cost nobody talks about. So if nobody talks about, we have to talk about on this channel, just like in the previous option strategies which I have made, and I've showed you how we can really trade options. We can try to hedge it in a way which is less common, right? You can obviously watch it, but here, rollover cost. So basically what this is in a clear nutshell is that the future usually trades at a premium than the spot. So when we long future, for example, if the stock is around 100 at the cash market, but the same stock, not always, but in most situations, trade slightly higher. So maybe 101 is the rate of the future, right? So when we long future, we are actually paying the premium as well. That is the rollover cost. And what do is that before the last Tuesday, we square off our future and we try to take a position in the next. So that 1% adds up. 12 months is equal to 12%. This is not fixed. It can be above 1%, it can be below 1%, but just to tell you in terms of example. Also, the bid and ask spread in the futures, right? Not always. Suppose if you picked a blue chip stock, then it's fine. But a lot of future as well, there can be, a big difference between bid and ask. That is an additional rollover cost, which I see hardly buddy talk about it. So that is something which one have to be very careful about. Also, pair using futures. This is very interesting. Probably one of the tools why people use futures. I want to show you this a little deeper. It's very interesting. Now, for example, here we have a TCS, and suppose if somebody plans to take a trade, not a recommendation, but if somebody plans to long TCS, but at the same time, probably a stock may be Infosys, right? Just to show you an example, probably, think that Infosys is gonna go down. Now, you cannot short the cash market stock and hold it for the entire month or for delivery, but in future one can long it and probably next day can square off, or maybe after a week in the same contract. But in cash we cannot do. In cash we cannot short it overnight. So if it also works in a pair trading concept where we long a particular stock and we can also short as well. Can be from the same sector or from other sector. I've made a very highly viewed video on pair trading. You can obviously watch it and learn about the future trading. Like I say, hit and trial way of trading one must completely avoid. Like you've learned about the future, there are some blind spots. There are some good things as well about which future trading brings. How you can combine the price along with the data of the future and try to read the market in a much better way. Futures trading is very popular. Why? Because it gives some kind of a leverage of the margin, the topic which we have covered. So if you look forward to trade future, good, you've learned good and strong new points. Or if you are trading into the futures from quite some time, today it's a good revision for you. Also, some more deeper insights. I'm sure next time when you trade futures, you will always have a look at the bid and ask and try to compare the cost of carry future as well and the cost of rollover, which hardly gets discussed online. All right, everybody, thanks for watching and I wish you all the very best. Take care, signing off. Bye-bye.